Welcome to today's market report. European stock markets traded lower on Wednesday as doubts about the speed of recovery from the COVID-19 pandemic weighed on the sentiment, even after healthy business activity data. DAX in Germany traded 0.5% lower, CAC 40 fell 0.4%, FTSE 100 dropped 0.2%. Europe is currently suffering from a third wave of the COVID-19 virus, with the Netherlands announcing late Tuesday that a nationwide curfew will be extended by 3 weeks until late April, joining the likes of Germany, France and Italy, which have already tightened restrictive measures. Part of the problem has been the relative slow rollout of vaccines within the region, something that has prompted a spat between Britain and the EU over the distribution of the drugs. The European Union is set to extend COVID-19 vaccine export curbs to Britain and other areas with much higher vaccination rates, and to cover instances of companies backloading contracted supplies, EU officials said on Wednesday. Adding to the worries, confidence in the safety of AstraZeneca's vaccine took another hit on Tuesday after a US health agency said its trial may have included outdated information. On a brighter note, German factory activity rose to a record high in March, and the service sector expanded after 5 consecutive months of contractions, with the country's preliminary composite PMI rising to a 37-month high of 56.8 from 51.1 the previous month. This suggests Europe's largest economy was shrugging off pandemic lockdowns, although the surveys were conducted before the latest restrictions. French data also showed strong growth, although its composite PMI release climbed to 49.5% from 47, still in contraction territory. Inflation data from the UK had earlier undershot, with February CPI release climbing by just 0.4% on the year versus the expected 0.8%, and by the 0.1% on the month versus 0.5% expected. In the corporate sector, Carrefour stock rose 0.4% after the French retail giant announced plans to buy Brazilian food retailer Grupo BIG for around 1.1 billion euros. Bellway stock fell 1.9% after the UK-based house builder put aside another £20 million to cover recladding and other remediation works on its buildings in the wake of the Grenfell Tower disaster. Oil prices pushed higher on Wednesday, steadying after the sharp losses of the previous session, but worries about a slow recovery to demand remain given the fresh lockdowns in Europe and a build in US inventories limited gains. US crude futures traded 2.2% higher at $59.04 per barrel. Brent rose 2.2% to $62.15 per barrel. Both benchmarks have still fallen nearly 15% from their recent highs earlier this month. Gold futures rose 0.3% to $1,730.15 per ounce. On the FX front, GBP/USD has been tumbling down amid a worsening market mood and a weak UK data. Nevertheless, oversold conditions and Boris' efforts may trigger a rebound. Brussels is drafting rules that may not only limit exports of inoculations, but also raw materials. Boris Johnson is trying to soothe tensions and find a compromise that would allow Britain to continue its successful campaign ahead of an EU summit on Thursday. Concerns about a halt to jabbing are weighing on sterling, and a solution could help it recover. Comments from Treasury Secretary Janet Yellen to the House Financial Services Committee on Tuesday, indicating that tax rises may be on their way, supported the greenback. According to economists, the US dollar should be rising 20% in year-on-year terms instead of falling 15%, according to relative growth expectations. Investors are eyeing on Yellen and Powell again today, as well as on durable goods order statistics for February, which is forecast to show increased expansion. The GBP-USD pair has breached key downside support and may extend the fall to the 136.10 neighborhood, economists at OCBC Bank reported. The GBP-USD lost the 138 support quickly overnight, which perhaps points to further downside, and the next target may be the 136 area. Having said all that, the relative strength index has dropped below 30, entering oversold condition and implying a bounce. GBP-EUR dropped to 115.60, the lowest level since the beginning of the month, after having reached a 11-month high. Euro-dollar has breached key downside support, trading at 118.28, whilst the dollar index was at 92.485. This is today's market news. Thanks for listening. We'll see you next time.